Hi, I'm Shane Balkham, Chief Investment Officer at U Asset Management, and welcome to my 2-minute missive. We've had some interesting data releases over the last week or so, notably in the US. Notably first was their payroll numbers, which showed a still strong, robust labour market. Underneath those headline numbers, we could see wage increases softening slightly. Now, this softening of wage pressures will ultimately help inflationary pressures as well. That takes us nicely to inflation. And the consumer price index numbers in the US came out this week. We had zero inflation for July. So no price rises from June to July. However, year on year, so from July this year to July last year, it's still over at 8%. What this means though is this softening of inflation data, and we're seeing some other data points recovering in supply chains, reduction in manufacturing costs, all things like that is helping paint a picture that inflation could well be starting to come under control. Then that takes us to the central banks. Will they still continue with rate rises or will they not? I think the biggest clue is back into the early 70s when there was a similar situation. Central banks having to raise interest rates to combat inflation, which they did well. However, the mistake they made was cutting rates too quickly. So I think we'll see a situation with central banks being more cautious, continuing to raise rates, allowing themselves to see that through the data before we have interest rate cuts, which could be sooner than many of us anticipate. So a slightly optimistic note, but still need to be cautious at this point in the cycle. As always, these views are my own, and before taking any investment decisions, please seek your financial advisor's advice. Cheers.